So I wanted to go over a setup that I took today and was able to capture a fair amount of points, a lot of points. Let's see, like so today when I came to the market, I was just looking at before any of this happened. Like this right here is the 9 o'clock candle. This right here is the 10 o'clock candle. So when the market first opened, we got a drop off of open. The market dropped, and most people probably start panicking. But what I did was I had these fair value gaps drawn out. So I was understanding that we could just be coming and retracing into these fair value gaps to go higher because I was also bullish. I also was bullish because we had previously swept a weekly level and we was tapping into a weekly gap and we swept the level here. So I was looking for higher prices and more bullishness. So as we came down on this first gap, I was patient. And when we got into this second gap, that's when I was able to find a trade. So typically what I'm trading is, and my style of trading when I'm trading continuations is like, if you like to see a market structure shift, and this right here was the market structure shift. And you see, we got a market structure shift. And what do we want to see after we get a market structure shift? We want to see the market pull back into a fair value gap. And that's where we find our entry to catch a retracement. And I'll just do a small little recap. Like, so we know that price doesn't move straight up. We know price does this. We know price will move up, come down, retrace, go higher, retrace, take out the high, retrace, go higher, retrace. That's how we move when we're going higher. So if we know that's how we move and we get these retracements, that's where we want to be entering. Once we get this market structure shift here, once we break out above a high and we pull back and retrace, that's where we want to be entering. Just like here, we broke above this high, created a new high, and then we tapped into this fair value gap. So once we tapped into this fair value gap, I then was looking for a trade. So right here is the hourly time frame, and I like to pair my hourly with the 5 minute. So let's go to this 5 minute, and this is that same hourly gap. And what we have right here on this 5 minute is we have an inversion being created. And let's mark this inversion. Let's just do green. We have this inversion being created. And as you can see, what happened after price closed above the inversions. And if you don't know what inversions are or you're not familiar, I will have some videos coming up specifically about inversion because they are my bread and butter and they are something that you will want to know. But just to keep it simple, inversion is just a fair value gap that instead of price just tapping into it and keep going lower, it closes above the fair value gap. It violates it. So right here, when we closed above this fair value gap, we violated it. And once we close above it, that lets us know that price wants to get bullish. And we're also tapping inside of a hourly and a 4 hour gap that we want to see price respect and bounce out of this gap. So once we got to close above this inversion, that's where I enter. And once I entered off of that, then we just seen higher prices for the rest of the day. And I had a target. I think this was my target here. We had a news candle high from 7:30 and 976. This was my target. And I sent the message to my group and to my guys, letting them know while we were dropping, I was letting them know that I was still bullish and I was anticipating higher prices. And I wanted us to come up and take out this liquidity that was in this news candle. And I can also show you a second opportunity. Like if you missed that one, if you weren't able to be at the chart that early, we have the exact same thing happen twice. So let's do this. Like we'll mark out this mark. This was the market structure shift. This was price tapping back into the fair value gap after displacing higher. And then we got the exact same thing again. We got a market structure shift here. Like we had a market structure shift here. We went above and closed above there. But what did we get with that market structure shift? Price tapped back into another fair value gap. Let me label this fair value gap a different color. So when I go to my lower time frame, I can see it. So right here now, this is us catching the second retracement. So now let's go to the 5 minute again. And if you see here, we will mark out our fair value gap again, just as we just did. And once we see a close above that fair value gap while we're tapping into a higher time frame fair value gap, this is where we can enter. And typically when I'm entering a trade, I want to target a 2-to-1. So these are places that you can put your stop. If you want to be very conservative and give your trade some room to run, put it below the swing low of the inversion. Like we have this fair value gap here, and this is the inversion. Put it below the swing low that's closest to the inversion if you want to be very modest. If you want to use less risk, you want to put your stop loss below the inversion. So right here below the inversion is where you want to put your stop loss if you want to be very modest, and you can just target a simple 3-to-1 or 2-to-1, whichever. And like, because these are two targets that I was expecting on this trade to take out because they are the closest swing points. So those swing points are places that you want to be thinking about taking profit because they are liquidity, and it's somewhere where the market could turn around. It could just come to this point, take that liquidity, and then start going back lower to points like this and points like that. So setting your stop loss, I will have lessons about setting a stop loss because you can use different, like if you want to be have a very tight stop loss, this is where you would have it in this instant. Or if you want to give your trade some room to breathe, you put your stop loss like here, but you will have to target a little bit more. You have to target up here like a 2-to-1, which today we did get that 2-to-1 move. So those are places that you can definitely two places you can put your stop loss. And I will have further videos talking specifically about stop losses, but I just want to show two A+ setups that I seen today. And remember, all of my trades come from higher time frame levels. Like here, we tapped into this hourly gap, and I was expecting price to continue to go higher. I was expecting this just to be a retracement and go higher. Just like here, we pulled back into this fair value gap. I was expecting it to just be a retracement and to go higher. So when I'm expecting it and I'm on the right side of price, I'm then looking for my entry criteria. You don't want to just enter any trade just willy-nilly. You want to set an entry criteria because it saves you from yourself when you have a strict entry criteria that you have to follow. Like you need this, this, and this to happen before you can get in a trade. Because when you don't do that, you're not saving yourself from yourself. You'll just take trades blindly. You'll take bad setups because you don't have any rules to differentiate a good setup versus a bad one.